We're now joining the Airports Company of South Africa media briefing, where the company is presenting its financial results for the 2024-2025 financial year. And this briefing is expected to provide a clearer picture of the company's current position and what to expect moving forward in South Africa's aviation sector. CEO Mpumi Mpofu is now on the podium. Let's listen in.
Morning, Kimberly. Thank you. Give him a round of applause, please. Thank you. The next team that will be shown is the Airports Company team. After Kimberly. Are we getting through to another airport, please? No? Okay. We know they're here with us. They are connected. It seems the crossover is turning out to be a little bit difficult. And I'll ask that on that basis, we then proceed with our presentation. And as we do that, knowing full well that we have the full audience of ACSA staff that are sitting at various airports having joined us, we run a 24-hour business. Half of them are at work right now facilitating passengers. They can't join us, but those that can have been assigned a boardroom where they join us for this very auspicious occasion of the release of our results. Sustain the pulse, sustain the pulse, sustain the pulse. Quite appropriate for what describes what ACSA has gone through over the last few years of COVID. And this year marks a breakaway from recovery. It marks excellent financial performance that we're able to demonstrate. But it marks resilience amongst several challenges that we faced as a company, that we faced as the various airports. I'll be taking you through this presentation, and in the presentation, I will deal with very specifically the macro environment, our strategy, and our operating environment. The CFO will then come up and deal with the financial performance and the capital expenditure. I will then return and talk to you about the outlook and conclusions. At that point, we'll be able to take questions and answers from the audience. I understand there are questions and answers from social media as well that we'll be managing. And as we really start in our introduction, quite clearly, ACSA has been challenged this year more than many other years before. We were quite confident that we had come out of the recovery, come out of COVID, but in fact, 24-25 humbled us. It threw on us a number of challenges, operating challenges that led to service disruptions that were unprecedented. And part of those challenges were a reflection of our inability, as we acknowledge, to keep a very close eye on all the aspects of our infrastructure and the level of deterioration and the potential risk that that posed to operations. We boasted about a CAPEX program that we were allocated, but in fact, because of a year's delay in the CAPEX allocation, we had not started implementing the maintenance programs. We acknowledge that. It taught us lessons. It humbled us. It brought us to a point at which we were required to review our preventative maintenance systems, to review our operational efficiency measures, to also review how we garner our stakeholders and work with them tirelessly to implement projects that are mission critical in order to eliminate service disruptions. So we come out of that with a very strong financial performance. And the detail of that will be shared with you. But the strong financial performance is backed up by clearly diligence, discipline in financial management, but also a renewed focus in managing long-term financial sustainability. We've seen many challenges that are beyond us. Economic externalities that were not within our control. I keep reminding people this is the only period I can remember post-1945 where we had 2 wars and were still walking the streets as if nothing had happened. We had a war in Russia and Ukraine. We had a war in Israel and Gaza. And the impact on global aviation that comes with that was so significant that it impacted on our overall performance, as you will see later on. Those global challenges did not deter us, though, in our fervent commitment to creating and delivering value for shareholders and all our stakeholders. In this period, we strategically shifted from the first 5 years of a strategy that was focused on recover and sustain. And we thought we had overcome the impacts of COVID. We developed a new strategy that is to take us to the next 5 years, but more importantly, to the next decade. And that strategy is innovate, grow, and sustain. And the emphasis in that strategy is quite simply to focus on innovation, which is used as a catalyst for transformative change, inclusivity, and enhanced passenger experience. And we recognize the catch-up we have to play to match the best in the world of airport operations and make sure that our passengers face a seamless experience, whether they are flying from London to Dubai, to OR Tambo, and to all our airport network. And that importantly requires us to invest in technology, innovation, AI, robotics, facial recognition, and all sorts of exciting technology that will make sure we remain equal to the best in the world. The substance of this period, though, is also going to be marked by our second pillar, which is growth. And our growth strategy, adopted in the year prior in 23-24, marks several initiatives that enable us to grow revenue, to grow the platform, to grow our footprint on the continent, and more importantly, to grow our passenger numbers and establish ourselves, very simply, as the best transformative force, particularly in Southern Africa and Africa. Our sustainability angle looks at ensuring we sustain our operations across through effective and efficient business, supporting communities, and that sustainability backed by an ESG, environment, social, and governance framework, allows us specifically to focus very specifically on our surrounding communities. And we now demarcate them clearly, so there's no ambiguity. It is 10-kilometer radius from an airport, and we define them as part of the airport community. They benefit from our programs, employment, preferential treatment, social programs, education initiatives, social support, and the management of programs related to vulnerable communities within that 10-kilometer radius. And our sustainability program also anchors on our very strong environmental programs, backed up by our carbon accreditation programs, which will ensure that we remain a responsible corporate citizen with minimal environmental impact. We've garnered the accolades. We've struggled through the challenges, but we've remained on top, garnering accolades across the world and winning awards that basically keep us in the leadership position on the African continent in relation to various operations. And these are based on customer satisfaction, and they highlight a truth in customers really reflecting what their experience was. Cape Town wins for the 6th time running the best airport in Africa, the best airport staff in Africa. OR Tambo gets 3rd position this year for the best airport in Africa. And we acknowledge that. Again, Cindy, where are you? I like what you said. Those who remember Jan Smuts Airport will know the problems we experience in OR Tambo are related to the oldest parts of the airport that are starting to show strain. And OR Tambo, with the refurbishments that are going to be undertaken, will truly rise like a phoenix out of the ashes in the next few years and recover as the largest airport in our country. King Shaka has retained, ever since it was built, the best regional airport in Africa. And that's a category of slightly smaller airports than OR Tambo. It is joined this year by the Chief David Stearman Airport taking 4th place. King Palo Airport takes 6th place. And we then see a series of other awards that have been won by Airports Company South Africa, the Airport Experience Award to Cape Town International, the best airport hotel in Africa at OR Tambo, which is basically the Intercontinental Hotel. So that basically is a very clear testimony from customers, passengers, of what ACSA has been capable of delivering. It lies on the shoulders of our staff. It lies on the shoulders of who today we proudly unify ourselves with and show that ACSA's success is only achieved through concerted effort, dedication from the CEO right down to the lowest level of worker on the platform in the airport. I'd like you to give a round of applause in singular. Because in sense, on the African continent, we compete with many other airports. And as such, in that competition, ACSA has led and ACSA has continued to provide leadership and support also to those airports. The challenges we faced in the global environment, though, have given us food for thought, but as I indicated earlier, they've taught us how to deal with things that are beyond our control. In this period of this financial year, in the last part of that quarter, a great uncertainty emerged from the USA with sweeping tariff hikes being suggested. The impact of tariff hikes on our economy, and particularly the South African economy, as was indicated to be the one that is going to be most highly hit, have meant that we are not certain in the aviation sector as to the extent of those tariffs, and only I can indicate today are there reports that are suggesting that typically, like South Africa has always done, the tariffs that have been imposed are starting to feel like water off a duck's back. And that's a sign of resilience of this economy. That's a sign of how South Africa is able to diversify its economy and ensure that we're able to live above what are global threats that we may face. We look forward to understanding fully the implications of those tariffs, but we've already seen signs that suggest that we have alternative strategies to mitigate the negative impacts of the tariffs. One of the negative impacts that this has had, you will see later, relates to our overall performance on aeronautical revenue, which in the fourth quarter, we could have seen a surge, but because of this global economic uncertainty, the fourth quarter on aeronautical revenue was showing a decline. We also have seen a decline in the sub-Saharan region of Africa in air cargo and business travel, and uncertainty in infrastructure investments and cross-border airport partnerships. What all of this presents for us on the African continent is an opportunity for realignment, for refocus, and more importantly, an opportunity to prioritize the things we should do to support the African continental free trade area and to grow cargo on the continent. So we've been operating under a very volatile geopolitical landscape, and in that, it has impacted also on the intra-Africa travel trade. It has impacted on what we call the war zones. And typically what happens in the war zones is that they become no-fly zones. And the restriction of aviation above Gaza, above Ukraine, places an inordinate cost on the aviation and airlines that fly across those regions, because they have to divert and go all the way around, avoiding those regions. So very often airlines take a decision to reschedule, reduce the number of flights that are high costed, or to cancel them, and to minimize that impact on their baseline. So as an airport, we've been managing these various difficult challenges, and in doing so, we have had to place strategic initiatives that help us to navigate. Global traffic at end of March in this financial year has recovered, and it has been a very exciting 9.5 billion of passengers. We are just short in South Africa at 92% of meeting the 2019 figures. What this also indicates is that we've had, in the period, a 3.3% year-on-year increase in the revenue passenger kilometers. The other indicator is a decline in 80.7% of load factor. Now, the load factor decline is quite an interesting one. It comes on the back of the industry placing more capacity in this period, and therefore resulting in a higher load factor. But the confidence that leads the industry to place more capacity is really what we earmark, and that is exciting news. We note that that load factor, once the capacity has been placed, can quite simply show a resurgent, because the capacity has been committed by airlines, and that confidence, it's a cyclical relationship, that confidence on its own will give birth to higher load factors that will result. We've also been led largely by performance in the various regions. And the regions impact on us, but also as we are part of the African region overall, there we see a 44.1% increase in growth rates for airlines, particularly the African airlines. What we do note is that it's very important in this region for us to continue with relationships with our normal source markets. So we look at Europe, which has had a 4.4% year-on-year increase on traffic, North America, which has had a fall of 1.1% and a 3.5% drop. Latin America has also had a growth of 6.2%, with Brazil particularly, our BRICS partner, showing exciting growth at 8.9% in that region. So the analysis of our source markets that lie in those areas is an important issue for us, particularly from a tourism perspective, but now more so as well from a trade perspective, given our trading partners, and particularly within the BRICS formation. Global performance was also seen here by segment and region, and important to just note the contribution to the global performance of international aviation, which remains in the red bars at its highest, again in the period, declining somewhat towards the end of the financial year. Similarly, you would see the industry-wide revenue passenger kilometers year-on-year growth, and that we've segmented by regions so that you can see the highest contributor as clearly Asia Pacific. And Asia Pacific continues to dominate in that market, second almost to Europe, and then followed by North America. The global cargo performance from a demand perspective has grown by 4.4% year on year and has reached peak of the month. And what we're able to see is, very interestingly, how the different regions have performed. Concerning is Africa's decline, specifically on the cargo ton kilometers, but more importantly, the decline in Middle East. We've tried to do some analysis about this Middle East factor, because as you all know, the aviation sector in Middle East is growing, leaps and bounds. But for some reason, the issue of the cargo operations in the Middle East was quite disappointing in the March 2025 cycle. What is also important is just an analysis of what has happened in the Africa to Asia route analysis for cargo ton kilometers, where there was a surge in March 2023, another surge in January 2024. And this is significant because those surges actually set up a very important trend line for the business between Africa and Asia, which clearly is demonstrated to be on a growth track.
That's the Airports Company South Africa that is currently presenting its latest financial results, and CEO Mpumi Mpofu is calling this the most challenging year the company has ever faced, from lingering post-pandemic turbulence to rising costs and operational pressures. ACSA has had to navigate more headwinds now than ever. Yet despite these challenges, the company is reporting a turnaround that reinforces its resilience. Now, passenger traffic and aircraft movements we've been hearing they have continued to recover, driving growth across both operations as well as other streams such as retail and property there. We park it there for now.